BNP Paribas Real Estate is a full-service real estate firm. We operate across 29 countries in Europe, and we aim to give our clients the best advice and service across all real estate asset classes, not just logistics and industrial, although this is my own focus. And if you need us, please call us. It's a pleasure to be here. Thank you.
Great, Tim.
Okay, so Tim Davies from Colliers. We do exactly the same as Logan and BNP, but we do it better.
Okay, I'm doing something different within the logistics real estate. I am Dirk Sosef and I work at Prologis. Prologis is a real estate investor. Prologis is only focusing on logistics real estate. Over Europe, we own roughly around 17 million square meters across 12 countries. So we are quite big. Within Prologis, European headquarters is based here in Amsterdam. I'm responsible for the resources strategy. One of the most interesting things I believe in my job is to see across Europe. When we talk about Europe, we see, let's say, one overall picture. But when you dig into Europe, you see so many differences, what is happening inside of Europe. I think that's one of the more interesting things to see when we talk about the logistics market.
Great, thank you. Tim, just with you, I want to pick up a little bit on some of the facts and figures and the movements in the market that Logan was talking about. How much of that do you think is based on the sort of view that there will be growth, or how much of it is based on what the market is actually saying at the moment in terms of the growth that we're all predicting for the logistics sector?
So I actually think it's probably a mixture of both. I never thought I would say the day that sheds are sexy, but they're now sexy. And I think the e-commerce sort of boom has catapulted that sector of the market into everybody's forefront of everybody's attention. So both on an occupational side and from an investment perspective as well. I think there's going to be tremendous growth going forward. I think if you look at the statistics that have been released recently by Barclays, who suggest that in terms of the amount of retail that's done online, it will increase from sort of the 20%, this is UK statistics at the moment, from 20% last year, and they think it will increase to over 50% by 2024. I actually think it might be sooner than that, and I think that e-commerce is a global phenomenon, so if that happens in the UK, rest assured it's going to be happening throughout EMEA as well.
Okay, good. And Dirk, I wanted to just dig down into some of the areas. I mean, Logan mentioned the research that you'd been doing particularly, and one of the key things is innovation that is being discussed here at PROVADA generally. We've got concepts like last touch coming in, and also Logan, mentioned the fact that what had enabled it in a way was this technology. So in terms of the sort of key trends that you're tracking from a research point of view, what are the main things that you're seeing that we should all be thinking about for the next kind of 12 to 24 months?
Do you have a half an hour or not?
We've got about half an hour, but
okay. No, so as Logan is saying, a lot is happening within our sector, a lot. I think, as everybody agrees on, we are really changing as a sector from, let's say, 10 years ago, from an ugly duckling to a beautiful swan. I think the investment community right now understands the attractive characteristics logistics real estate has. It has very good direct income, a very defensive asset class. And of course, e-commerce helped us. But I think one of the key points I would like to raise today is when we look at our own portfolio and our leasing activity, of course, e-commerce helps us a lot to put us more to the general public. But it's much more for logistics real estate than only e-commerce. When you look at new leasing for our own portfolio of 70 million square meters, around 20% right now is done by the e-commerce companies, but the other 80% is done by the more traditional companies. So in general, what I see is that the whole sector is really moving forward. What we have seen in the past years, and this is really in a nutshell what we have seen, the logistics market was hit quite hard during the financial crisis. Prologis as well. So you saw a lot of speculative product in the market, a lot of oversupply in the market. In, let's say, 2010 up to 2013, you saw a recovery, and a lot of vacant space got absorbed by the market. Right now, the vacancy level in Europe is 5.5%, the market vacancy. And that's the lowest level, and that's quite unique for the real estate sector, that we are below the levels we have seen back in 2007. So we are right now at the lowest point we have ever seen in terms of vacancy.
And that's quite interesting because, Logan, when you showed the slide, you obviously showed the take-up in the UK, and then we looked across some of the other countries, and you could see that take-up in some was substantially below, not just 50%, but much, much lower than that. Ultimately, although there are different markets, and plainly some have bigger gaps between their cities than we do in the UK. The UK is a fairly well-populated, densely populated area. But do we expect to see, at least it moving up for the majority of them to the kind of 60%, 70%? Ultimately, where do you see that heading?
The question, where I see take-up headed or vacancy, I think...
No, vacancy, because I think if we're already looking at low vacancy now, but we're expecting to have that kind of demand coming into the market, then that's why we're seeing speculative building, obviously. It suggests to me that that's got to continue further.
I think that's right. I mean, we've seen continued growth. It's difficult to speculate on exact numbers, but I think you could see, 5 to 10% continued net absorption throughout. The fact that Dirk mentioned is really important. We've got 5% vacancy structurally throughout Europe. When people underwrite portfolios of buildings, usually they will underwrite something greater than 5%. The levels of occupancy for this sector, I think, over the past 5 years have surprised even the people who are closest to the assets and closest to the tenants. That is really, really unique when you think about it. And I mean, these are not asset managers that are asleep at the switch. These are some very big names, very smart people that all of a sudden they'd have 3 vacant buildings, and all of a sudden they'd get lease inquiries for all 3. What happened? Hey, great, they're leased. Well, maybe we should build more. I think one of the challenges might be, now that you have very clear investment benchmarks of capital values above replacement cost, I think that one of the interesting discussions is going to be when and where is speculative building going to be. And I think that's part of how I would answer the question about net absorption, because now really spec is happening in a lot of markets. There has been enough tenant demand to absorb a lot of it, but nevertheless, it is still happening, and we can expect it to happen more. One other thought on this too. Spec development now versus the spec development in 2007 is a little bit different. Spec development in 2007 tended to be 20,000 square meter, peri-suite area, it's kind of a standard market. Spec development now is a little bit more representative of a market that's matured over the past 8 years. It's more thoughtful rifle shot spec development. This is CBRE GI doing spec in Toulouse, for example. This is Prologis doing spec in Valencia, for example. All very good, thoughtful, smart projects, but if you roll back the clock 5 years, you would not hear anyone in the sector talking about building spec in Valencia, I promise you. And now, in fact, it's a very viable thing to do. And that's something that's different now versus how it was last cycle.
Okay, good, Tim. I want to pick that up a little bit because I remember, doing these sessions kind of 4 years ago, 5 years ago. There was, it was about how was the industry going to be able to manage to absorb the current stock. And then suddenly it happened over actually an incredibly short space of time. The move from, yes, we may be able to do some development, to then speculative development back again in the market. How much of that, Tim, is been driven by, let's call it, the e-commerce boom, and how much of that is just steady growth in the Eurozone? And given that what Dirk has said is that 80% is not e-commerce based, how much of those maybe more traditional tenants are also taking that kind of space?
I actually think that the e-commerce boom, or convenience retailing, for want of another word, I think that's what's really driving the market at the moment. I think the rest of it is pretty consistent in terms of just the out-and-out distribution and logistics, but what's underpinning it is absolutely the e-commerce boom. And I think, for example, if we look at Amazon, the company that just keeps on giving, 20% of pan-European take-up last year was as a result of the activities of Amazon. And I think, interestingly, they could potentially change the whole structure of the industrial and logistics real estate. It's quite interesting what Logan was saying about speculative development. I think that's still a brave shout. I think it will happen. But I also think we need to consider what these e-commerce companies actually want in terms of the specification and how they will change the buildings. I mean, gone are the standard buildings of 10 meters, 12 meters eaves height. If you look what Amazon are doing at the moment, they are changing what's happening in our industry. You look at the robotics they're bringing in, you look at the autonomous vehicles, but also look at the specific design of the warehouses that they're developing. They have such a hold on the market that they are driving it.
Okay, good. And that's another, I consistently throughout these times, having been doing these for several years now, I see opportunities that I've missed. One of those was buying shares in Amazon when it was $1 a share as opposed to 1,000. But, you know, that's just another issue for me, you know. Tim there mentioned the impact of Amazon in terms of bringing in, you know, so you've got increased robotics, you've got changes in the supply line, you've got those. Just go through, because that's something you're studying a lot, just go through some of those bigger trends in terms of driverless vehicles, in terms of, you know, how those kinds of things will be ultimately changing the market.
So in general, we see a lot happening in the market. I think that Amazon is one of the leaders in terms of innovation and new technologies. What you see with, let's say, the medium-sized and smaller retailers, they are still quite focused on labor. Why they're still quite focused on labor? I think the sector is developing that quickly the whole time. It's almost like buying a computer. When you bought a computer, let's say, a year ago, the day you purchased it, it already got, let's say, outdated. It's the same almost with technology in this sector. The developments go very quickly. So the return on investments going quickly as well. The second thing where the e-commerce sector is in a way struggling with, especially the medium, small-sized retailers with technology and innovations, is how to adapt to the peak times. So let's say nowadays, close to the summer period, it's relatively stable in an e-fulfillment center. Robotics can do the job, that's fine. But during Christmas, it's difficult for them to handle those peak times. So handling peak times is really a challenge for the sector. I think another interesting thing, and this is a little bit away from technology, but very clearly something we see within the e-commerce sector itself, when you look at innovations and trends, it's how a logistics warehouse is changing, let's say, from just a standard concrete building, let's say, not very inspiring for a lot of people. For me, it is inspiring, but not for a lot of people. But that asset is changing more and more to an asset where it is attractive to work in. I think one example for us is our new warehouse in the Rhine-Ruhr area for AO.com, a UK retailer moving to the continent. That online retailer has now not only in the warehouse just the e-fulfillment capabilities, but they have, for instance, a really nice restaurant. They even have a hairdresser for the employees. Why do they have that? That's really just to attract employees in the area. One of the other challenges the sector has, the e-commerce sector has, is to find qualified staff across Europe. And that's especially the case in markets like the UK and for sure in Germany, where the unemployment levels are extremely low.
Looking at that across the different countries, how's that impacting on the investment, Logan, do you think? How do you see these trends picking up on that? And the other thing I wanted to just look at was, also there's a lot of discussion as well about the rail route coming directly from China into Europe. Do you think that's also going to have an impact on, not necessarily related to e-commerce, but on logistics uptake?
Yes, to both points. The first one, to the extent that the investment market is interested in the broadening of the maturing of the property type, say. So you've got multi-story Amazon facilities. You've got a little bit of a hybrid product between retail and logistics. I think that this is normal and to be expected and part of the natural growth. From what we've seen, the investment capital it recognizes that good logistics is firstly about location. If there's amenities that go beyond it, if it's a slightly different product, there's a price at which it can be underwritten, and there's a price at which that risk can be quantified, and that's how it is. Generally speaking, given that logistics, as strong as it's been, remains only about 11% of investable commercial property, there's not that much to go around. And so this is what we've seen. And so there still is more capital than there is product. Over time, this will reflect in the market equilibrating to a higher level. But this is still what we're seeing, and I think it accommodates an even more broad range of potential investment types. To the new Silk Road, I think we're as interested as anybody about it, though I wouldn't necessarily limit the sector to it, right? We've been talking for a long time about intermodal rail in the UK and here and there and port-related investments, and ultimately, like all of these public-private investor types of situations, you really just need a tenant who, at the end of the day, says they want to be there and they'll sign a lease that's bankable so that someone will develop a product around it. So for sure, it's absolutely going to happen. It will absolutely increase demand in the sector. And perhaps it will make some Central European markets more attractive over time. Perhaps it will lead more to a strengthening of markets in the Rhine-Ruhr at the terminus. Yeah.
Richard, one interesting thing I saw when we talk about investments and e-commerce and innovations is an example we have in London, in Dunstable, north of London. We have a warehouse there of around 60,000 square meters, and Amazon is there with their Kiva robots. When you look at the investments they did inside their warehouse, it's higher than, let's say, the value of the building we have in Dunstable, so the building itself. It's too early to say, how this affects the retention rate, so the probabilities that the customer will stay. But I think you can make a strong case out of it that when an occupier like Amazon invests that heavily in their warehouse, there's a big chance that they will stay inside that warehouse. So you will get very high retention rates from an investment perspective.
Okay, good. Tim, you wanted to pick that up.
I think just following up on that theme as well, and an interesting development that is happening in the UK, and I sort of appreciate Logan's views on this, is that there is such a massive appetite for e-commerce occupiers. I think there is an opportunity that they are creating their own special asset class, and it's driving the yields down. I mean, we are almost at 4% for yields for e-commerce in the UK at the moment. Is that a phenomenon that's going to continue? Will it continue through Europe? I suspect with the appetite for investments of this type at the moment, such a wealth of money and funding that's available globally, that will happen.
Absolutely. I mean, we've seen it already. Not even directly related to this, I think another interesting aspect is we've even seen, there's a couple comps I believe I've heard in the UK, in the around about 4% range for light industrial. And this is another topic that gets a bit into this sort of discussion of what is last mile and how do you invest in it. And there's a lot of shorthand solutions to it. I think there's a lot of investors that just assume you can buy anything that's reasonably close into a population center, and therefore it, by definition, is last mile. But I think the answer is a bit more complex. But for sure, you've seen more capital move into not just the core bankable 15-year term deals. That's always been the case. Yeah. I think where the story is the money going outside, the Spains, the Italys, the Polands, the interest in under-rented buildings with a year and a half on the term that 3 years ago you wouldn't really have seen. Now you're seeing people take a more thoughtful view and actually have a view on the sector. I'll give you an example. This is a building in Germany, really good location, credit lease, 10-year term, but here's the catch, 20-year-old cross-dock on a great site. And looked at this building and had 4 very well-qualified, established funds all fighting with each other to get the deal. This is 2 years ago, this would not have been seen as a core deal in any respect. 2 years later, you have all of these institutions, all insurance companies, all fairly traditional. They understand it. They understand that the value of the location has an inherent value that don't necessarily look at the construction year of the building. 2 years ago, that wouldn't have been the case. There's much more, and it's not just people frantically trying to get money out. It's more thoughtfulness within the institutional community about what actually constitutes a good location to distribute assets and what doesn't.
Yeah, I think that's reflective of what you said about the light industrial estates at 4% in the UK as well. I think that's the foresight of the investors. They're looking at the last mile, last touch. The small light industrial estates, they tend to be very much urban locations, so city centre locations. They've got the foresight that is going to be an important part of e-commerce going forward. They're building for the future. They're taking older second-hand buildings. They're taking investments at those low levels because what they think is going to be happening.
Okay, good. Dirk, I want to pick up with you. We've seen that people are now beginning to, I think that is true, and I've seen that as well reflected, that the move from things that we were discussing kind of 18 months ago, 2 years ago, about where do you find that inner city logistics? Does that mean that you're going to actually be looking at people buying light industrial, which they can then convert into this kind of asset class? In terms of the last mile, we were talking at Transport and Logistics in Munich a couple of weeks ago about that I was wrong, that last mile was no longer good enough, and I didn't know what I was talking about, and last touch was the important thing. And I said, I don't know what you mean, Dirk. So what are the differences? Why is that a critical thing, especially, and how do you regard that, and how is that going to drive the sector and maybe change some of the things that we're talking about?
Yeah, so there's only one different word instead of mile, is touch. While it is for our sector is touch more important, is because when you talk about the last mile, it's really, let's say literally about the last mile before the good enters the door of the consumer. Then it's already out of the warehouse, and we as the sector are not involved in it anymore. We as a sector are involved in the last touch. So when it enters your logistics warehouse, and it can be indeed a smaller existing warehouse, most of the location, infill, close to your end customer, so that's one trend which we clearly see. But the other side, we see as well more the regional distribution centers as well. So you see really clearly two different types of demand. Those regional distribution centers are more located centrally in a big catchment area. I think for the Benelux, Tilburg is a really great example. Centrally located in the Benelux. And for the last touch, it is really more around the the population areas. Why do they want to be located over there? Of course, as everybody's saying, it has to do with proximity to customer. It has to do with availability of qualified staff. Important one. It's important for them, for everybody, to tap in the postal network. So to be close to the parcel carrier postal network to quickly put your packages away. Fourth reason, and that's in a way a new trend, what you see right now in comparison to 5 years ago. Let's say you, Richard, ordered 5 years ago on the internet only CDs. So let's say low volume goods with a high value. And at that time, it would make sense for an e-commerce player to drive from the Midlands to London to deliver your CD. But nowadays, you can order dog food on the internet as well. And then when you have a truck full of, let's say, high-value, low-density goods, it doesn't make economically sense to drive long distances anymore. And that's another reason, I think, why you see more and more movement closer to the end consumer.
And is that driven by consumer demand, do you think? Is that where that drive is coming from?
Yeah, I think that's the most important reason. Indeed, it is about the demand and the need from the increasing needs from customers to get the goods as quick as possible. Yeah.
And how do we think, Tim, just in terms of the occupier demand, we mentioned a little bit about logistics, but how is that consumer demand then playing into the occupier demand? And then the next part of that is, how does that also play into what investors are looking for?
So I think the occupier demand, they respond to what the retailers want. The retailers respond to what the consumers want. The consumers want convenience and they want speed. So hence, going back to what Dirk was saying, I could see there's going to be an increase in occupier demand for locations in urban centres. I think in terms of the occupiers who go there, they will take sensible longer-term leases. There'll be rental growth in there and they're good covenants. From an investor perspective, what's not to like in that? So that'll drive those markets up as well.
Judy Siebers, PropertyEU. I have a question about these brownfield developments and the potential of them. I mean, if you look at the demand in the sector, does it make sense to look at brownfield developments? Because I assume they're more complex to redevelop or not. Is that an attractive subsegment?
I mean, just the short answer is yes. The problem, as with a lot of these situations, is the time involved in doing it. So unless you've got a developer that has the love and caring attitude to go get the brownfield site ready for when the retailer or the distributor comes and says, I need to be there in 6 months, it's just easier to go next door. So for sure, there will be more interest in it, but it's really case by case. I wish I could say that there's a huge rush towards brownfield sites, but the fact is I haven't seen it, if there is.
What I think could be interesting, because obviously land is finite, I think with increasing demand for urban locations, then it wouldn't surprise me if going forward there's increased mixed-use developments. I mean, previously residential and warehousing from a planning perspective was polarized. I think now we've got to reassess that, and I could quite easily see warehouses sitting very comfortably with residential.
Hi, Cormac McCrory, also from PropertyEU. Logan at the start mentioned the CIC buying Logicor from Blackstone for a whopping 12 billion. And when you see deals like that, and when you see GIC buying P3 for 2.4 billion, recently AXA, EMEA buying a portfolio worth about $1 billion, and when you see deals like that, is there room for new investors to come in? Because it seems to me, I mean, looking at the deals of the last few months, there's a small select group and CBRE, Global Investors, and we all know who they are, but is there room, is there enough product for new investors coming into the market, or are they too late?
I mean, at some point it's a question of price, right? But for sure, new investors are nevertheless coming into the space. It's a question, I think, that's more relevant to logistics than almost any other sector. You would never ask that about the office sector. It doesn't make sense in a sense. But there's also different ways to get in, right? So you look at CBRE GI, they did a development JV in the UK with Prologis. That's a very specialized way to get in. Or you see some of the American groups coming in and they're taking a bit more of a value add style approach to it. So there's different themes and styles as you would expect. I do feel there's room to go. I see new entrants, I'm talking to them, that are very smart people. They've got very differentiated strategies, but at some point, yeah, it's just a question. I'd be interested. Go to CIC and offer them 14 billion, and they'll probably sell it to you, right? But let's see.
Okay, Florian Neumann, Idea Gaisley. Logan, you mentioned the cap rates that on a levered basis are basically still comparatively high. So the story being ugly duckling to beautiful swan aside, if we just look at the facts of the cap rates and the quantity of money in the market, isn't that the real explanation? And isn't it just simply nothing to do with the shed, the location, none of that? Isn't it just only money volume related?
Partly, but I have to say, having worked with Florian, I can say he's more qualified to answer that question than I am. But in any case, truly, right? I mean, there's some of it's weight of money, some of it's the fact that the levered yields are still relatively attractive to where they might have been in 2007. Is it a good investment? Well, who knows? At the end of the day, personally, I like the replacement cost argument, because if you can justify some premium relative to replacement cost, at some point beyond that, you really have to think about whether your market rents are right. So that, for me, from an underwriting standpoint, is the ceiling that you bump up against. And I know you agree, because I know we've had this conversation. So.
I think Logan's absolutely right in the way he's analysing that. I think also look at the potential for rental growth, because I still think there is growth in terms of rental, and I also think look at the covenant strength of the people who are taking logistics at the moment. Long-term commitments. Dirk's talked about the amount of money that they're investing in the buildings. They're there for the long term. It's not a short-term occupation.
Yeah, Vanessa Muscara from M&G Real Estate. A few questions. Do you see impact of the digital single market on e-commerce and the logistics sector? And second question, you said Prologis portfolio, 20% of it is e-commerce related. So are you starting to see a real difference in rents between standard industrials and then the e-commerce side of the portfolio in terms of the more sophisticated high-tech spec?
Yeah. So about this 20%, to be clear, it's 20% of the new leasing. So about all the leasing volume we do within our portfolio, of that share, of that volume, it's 20% new leasing is dedicated to e-commerce. So not our total portfolio is 20% e-commerce occupied by the sector, but 20% of the new leasing. Your question was about rents. It's difficult to really get your finger behind it, but at this stage, I don't see significant differences in rent between, let's say, e-commerce and non-e-commerce over the broad across Europe. Why is that? I think one of the reasons for that is that when we, as Prologis, develop logistics real estate, we want to, in a way, have it as a generic product. So we try not only to focus on the e-commerce requirements, but we try to deliver a generic product which is suitable for the e-commerce customers, but suitable for the non-e-commerce customers as well. So in a way, you have a similar building. And that's something when we talk of e-commerce customers, in a way, as I mentioned, they invest heavily inside the building. But to say it very simple, they only need 4 walls and a roof. And of course, there are differences in terms of, nuances. In general, e-commerce customers need more mezzanine space, but we try to be flexible in this mezzanine space to get it out and in if needed. They have higher needs for power, more power due to the higher levels of automation, and you see more social rooms. I think those are some differences, and in terms of parking, with public parking. But in general, when you look at the buildings, the e-commerce product is not significantly different in comparison to the non-e-commerce product.
Yeah, just a question about the role of retailers. I mean, there's a lot of talk about Amazon. Amazon gets mentioned all the time. But what I'm understanding is that retailers like H&M, Inditex, Decathlon are also driving like the extra large sheds. Can you comment on that development? How do you see that progressing?
I think logistics is the new retail. I think from a retailer's perspective, high street shops are, unless they're absolutely strategic in key locations, I think potentially they could become a thing of the past. Rents on sort of high streets are so high in comparison to rents on sheds. So, people are doing their shopping from sheds now. I think it's, and if you look at the sort of X and Y generations and the millennials, they've all come of age. So they're very computer savvy. They want to do their shopping online. And retailers are just responding to that. And I think high street shops are potentially, as I say, unless they're in key strategic locations, they're potentially a thing of the past.
Okay, great. And last but not least, quick question from me, which is, given that investment outlook is in there, in one sentence, where should we invest? Start with you, Logan. You can have 2 sentences if you like, but
I like good locations in all market. I'm much more location focused, specifically near population, near highways, for what that's worth.
Okay, good. Tim?
Generic, I know, but
I think I'd be a bit riskier. I think if you look where internet penetrations are at its lowest levels at the moment, where there's massive populations, I think there'll be big growth. I think e-commerce is a global phenomenon. Look at Russia, look at Turkey.
I would look at the markets with high barriers to supply. So where it's not easy for your neighbors to develop as well. I think that's always a good value driver. When you think about value drivers for the future, the value driver for the future is rent growth. So look at markets as well on the continent, where the net effective market rents are still more than 10% below their prior peak. So there's a further runway for rent growth on the continent, especially in Southern Europe and Central Eastern Europe.